Today UPI is shooting to touch 50% of the digital payments in the world. And I heard, luckily, the word account aggregator, which is growing at 30% month on month. And we know when it grows at that rate, it'll become a national system because that's the compounding effect. In the last 10 years, our bank account penetration went from 17% to 81%. We saw from the US innovation ecosystem that actually the innovation is public technology, private innovation. You won't have an Uber if there was no GPS.
Thanks, Sharad, as always, for being a sport, joining us. For those who don't know Sharad, I'll ask him to briefly introduce himself. But to most folks in the Bangalore-Bombay corridor of fintech, Sharad is, and now Delhi as well, because he tries to influence and, in a good way, drive policy decisions that accelerate the digitization of most things in India. So it's not just limited to money, but most things in the what's come to be known as DPI, a digital public infrastructure, which is being tom-tommed by us as one of the biggest sort of gifts to the world. And Sharad's been at the forefront of this crusade to ensure that this happens rapidly and most seamlessly in the country. So I met Sharad right at the beginning of the Blume sort of era, I would call it, 2010-11. I think you were still at Yahoo, Sharad, when I first met you, maybe, and moving out and working on things like UID, UPI, but the architect of iSPIRT. I think, Sharad, one brief introduction for somebody who may or may not know all your achievements, but maybe in the context of what I just introduced. And more importantly, maybe weave that into the backstory of how this digital public infrastructure came about in India, because you've seen it from the get-go. And why has it put us in such the forefront of fintech innovation globally? That context, I think, will be lovely for everyone to hear.
Back in 2009, I turned 45, right? And like many others in Bangalore, we had this angst. We were all from an R&D kind of a background. We had all been working for multinational companies. Sanjay Jain, if some of you know him, he used to be in Google at that time, and Pramod Verma, and many others. And we had this angst that we were doing this for making our American companies rich, but we weren't doing anything for India. And the simple idea was that we saw from the US innovation ecosystem that actually the innovation is public technology, private innovation. You won't have an Uber if there was no GPS. And I could give you many, many more examples of that. And that phenomena was not happening here in India. And at that time, if some of you know Sanjay Jain, and some of you can pull this slide from 2013. It's a 10-year-old slide. It's called Rajni, R-A-J-N-I, India Stack. It's a blue-colored slide that will come up on internet. And you will see there is an outer circle, which is public technology. There's an inner circle, what the startups or market players will do and what Rajni will do to get an intraday loan. And whatever has been listed in the outer circle, it's taken us 10 years to build it out. There's only one thing left. Can you guess what that is?
Not the health.
It was announced, no, this is all financial inclusion. It was announced by the FM in the budget. It's now the new name for that is NFIR. It's called the National Financial Inclusion Registry. With the old name of it is the PCR, Public Credit Registry. And you need that to solve a set of problems. But other than that, almost everything is in place. So I think what has happened is that our ecosystem now has 3 lanes in it. It has a lane for public infrastructure, public technology. It has a lane for regulated entities, and it has a lane for unregulated entities. And I think 3 big changes have happened, and 3 will happen in the next few years. So can I finish that and tell you what the 3 changes? I'm surprised they didn't come up. In the last 10 years, our bank account penetration went from 17% to 81%. In 7 years. All the business that you're doing is only possible because the people that you're going after have bank accounts. Today UPI is shooting to touch 50% of the digital payments in the world. And I heard, luckily, the word account aggregator, which is growing at 30% month on month. And we know when it grows at that rate, it will become a national system because that's the compounding effect. So the question is, if these are the three big changes that have happened in the last 10 years, what are the three that will happen in the next 5 years? And but
we'll wait for the finale. Yes. Then the other question is, clearly we have had a diversity of guests today, and we use the word fintech very liberally to encompass everything. It's become sexy to fashionable to use the word fintech, but a lot of it is actually layering of technology on traditional financial services. The business models don't dramatically differ, or the profitability doesn't dramatically differ from financial services. Where is the chasm? Like, what do you, in your mind, is it consistent with the venture capitalist world and the startup founders world of calling everything fintech, or do you see a clear differentiation between traditional BFSI and new age fintechs?
Why did Alipay die? Right? See, because there were two conceptions of how the financial ecosystem will be set up. One conception was a Silicon Valley conception, and that's a very reasonable conception. They said, look, these banks are old, aging, unable to innovate, and we're going to just replace the whole lot. The central bank will go away, all the crypto stuff will come in, and we'll have fintechs. It's a wholesale replacement of the old system, right? That was the mindset that had been there. And that was actually a mindset that was also working in China at that time, right? And China was growing fintechs essentially as a replacement of the traditional financial system that existed. And in India, we took a different approach. An Indian approach was, yes, there will be these two other lanes other than public infrastructure. You will have a UPI where the traditional players will be the custodians of money, but the fintechs will be in the flow of money.
Correct.
Right?
Correct.
And so the idea is that they'll work together with each other. So PhonePe had a wonderful relationship with Yes Bank, right? And so the question in Indian model was that there is another way of looking at, how the ecosystem will evolve. And I don't know how many of you know, on 9th of September, 2019, in Bank of International Settlement, there was a critical meeting that took place, which was actually hosted by our current governor. And it was after, I think, 13 or 14 years where their meeting was a single agenda meeting for all the central bankers to spend time understanding the Indian model. And you can see what came out of that. On December of 2019, BIS published a paper and saying that the new generational shift is coming in the financial sector, and the Indian model should be the model for the world. And at that time, the head of Asia Pacific Bank of International Settlements was Siddharth Tiwari, a macroeconomist, very famous person. And the Chinese approached him and they said, what do we learn from this? And it is then that they decided that they will move from the so-called Silicon Valley model to the Indian model. Now, we don't appreciate all this. How many of you do yogas here? All right. So there are 84 asanas in yoga. How many of you know the sutras of yoga? Actually, yoga is not asanas, is yoga sutras. We have this problem here that we are all about asanas. We don't focus on the sutras. And I think, so therefore, this whole narrative that India is a fintech capital started in the West only after this phenomena took place, right? And so that, I can tell you, there's nobody here who has read that BIS paper of December. You can look for it now. There is a big change that is coming in the way we are organizing our data economy. And in May of this year, again the same BIS made a recommendations that the data governance system for financial markets should follow the Indian model. It asks everybody, it's a paper from May. Now, who's the regulator? Not like RBI, SEBI, IRDA was mentioned. The global regulator for this is Bank of International Settlements, right? Central bank to central bank. Now, we don't pay attention to all this stuff that is happening because we are all in the app world. we don't build, we don't worry. OS होगा change होगा, kernel change होगा तो और भी क्या फिकर करना, you know. So these things then come from the left field and hit the industry, and I think there is lots going to come and hit you in a good way, because I think that will grow the industry in a significant way as we go forward.
And so follow-on question to that is, I think, two parts. Given what regulators are attempting, this, both these two lanes work together.
All three work together. So see, the good part is that all the regulators here, in fact, especially the three main ones, SEBI, IRDA, and RBI, they have adopted this model by conscious design.
That's right.
Right? And so they have a place in their mind for the unregulated fintechs. The problem that we have is that, especially in the case of BNPL, because there wasn't a respect for those lanes. And I'll give you an example. There is, in the case of UPI, there are again lanes.
Correct.
Our payment apps, you don't want to do KYC of the merchants based on their sponsor bank. They say, hey, we can do an effective KYC if you let us do it. This is a grouse that they've had. The difference is that they went to the regulator and said, this is a problem, can we find a solution for this? And the regulator found a solution, and you have the payment aggregation light license that is now available to those apps.
That's right.
On the BNPL side, largely because of VCs, there was cowboy behavior. First by the Chinese app, RBI came and attacked that. And what did our VC say? Hey, that empty space which the Chinese cowboys were filling, now you go and fill. And what has happened? RBI has killed that market completely, because there is this unwillingness to accept that this kind of three-lane model cannot be tampered with. So I think if you understand there's a three-lane model, if you are willing to respect that, engage with that, deal with the regulator in that context, I think many more things can happen.
So now this, we've had this chat once in front of the minister, Mr. Piyush Goyal, around, I think you said it sort of very boldly, that there will be a era very soon where sort of Indian rail companies on the back end, building on this phenomenal infrastructure, have a shot at becoming global fintechs for the first time. Yeah. And just for the wider audience, directionally, how do you see it play out?
Yeah, I think we must make a distinction between people who offer a service and the people who provide the infrastructure for that.
That's
service, right.
Yeah.
So when GSM, if you go back in time, my first visit in Scandinavia was in 1992, because like everybody else, I used to work for AT&T Lucent at that time. And like everybody else, everybody wanted to see what is this new animal called mobile phone. Right? So you would go to a place like Sweden and you knew that it was very sparse and Indian cities were different. But 50 countries by 1995 had decided they're going to have mobile phone. And GSM indeed went and conquered the world. When did you get your first phone? Does anybody remember? 1997 in India.
Yeah,
right?
96, 97.
So by end of the decade, more than 50 countries had mobile phone. Now it's not Telia or Telenor that traveled the world. It is Ericsson and Nokia that traveled the world. So in UPI, it's not going to be the Phone Pay and Bharat Pay and Paytm that will travel the world. You know who will travel the world? Can you name the infrastructure companies? Huh? No, NPCI is a public utility, but it's going to be people like JustPay. And we don't realize on a capital invested basis, JustPay's return on capital is better than any other company that you know.
Correct.
So we don't have, I'm happy I heard this, a little bit focus on saying it's not about all the consumer plays, it's about B2B plays.
That's right.
So I think that is the kind of infrastructure that's going to move, particularly in the data space. And why? Because the data architecture that we have for India, we don't have time to spend in talking about this today, but the data architecture that we have for India, which is called the Data Empowerment and Protection Architecture, DEPA.world. In fact, the place where you find all this is called DEPA.world. You can go and see this. And why? Because this is traveling to the rest of the world, because the US model won't go elsewhere. The European model doesn't respect innovation. Indian model has both innovation and privacy. So, and the DPDP bill is a complement to that. Like Aadhaar bill was a complement to Aadhaar, DPDP bill is a complement to DPA. So it's a techno-legal approach that has been taken. And I think out of that will emerge a lot of interesting companies as we go forward.
And then you heard a little bit of the debates. I saw you walk in, so you saw 2-3 panels play out, and there was this parlay on what can be future opportunity sets within India. Of course, the incumbents on all, at least the first 2 lanes today have a head start. But if you were a betting man on the Indian opportunity set, what do you think are the big white spaces, if I may ask?
There are 3. The first one is what was mentioned a little earlier by one of the panelists is short tenor cash flow lending. But I must make a distinction. It is not what the industry has focused on. Not what he called as Rajila. What was that name of the... No. Huh?
No.
No, Rajni is the iSPIRT version. But he had...
Rashida, I think.
But whatever.
Yeah.
See, I'll tell you, let me see if I can very, very quickly explain. There is a need for lending. Lending is a latent need that we all know is there. Now, there's a difference between unsecured consumption lending and unsecured business lending. I want to buy a washing machine. I don't have the 6,000 rupees. You come and give me a loan. Of course, I can't pay it back in 2 months. I want to pay back in 2 years.
Correct.
Right? Now, the problem is that if I'm a gig worker, you don't know who are the happiest people in Bombay today in lending, who are now making, presentations to their boards and all. Why? Because they're going to get a very big bonus end of the year. Is Visa and MasterCard.
Visa.
Right? So, is there anybody from Visa, MasterCard here? Right? You know why? So, think of it. How many debit card holders, customers that Visa, MasterCard have in India? Take a guess.
It's probably 600 million. Yeah, around that much.
Out of those customers, to how many of them have they given a credit card? 1 in 10.
Yeah, 1 in around
right?
that number.
So 9 people they turn down. Now you startups come and say, they must be crazy, man. I can give a loan to that 1 in 9, the turnout service, right? And make money out of it because they're too conservative. And what are they presenting to their management now? We told you, no. All those 9 people who are giving loan to those 9, they're all gone bust. I don't know how many of you are in that business still left, right? But if you are, you're running out of oxygen, probably pivoting right now. So they are all going and saying we were right all along. Because their simple formula is if you don't have 3 years of salary, stable salary, how can I give you a working capital limit for 1 year? I can't. And the fact is that a gig worker doesn't have stable income for the last 3 years. And therefore, they're not eligible for a 1 year working 1 year credit limit, which is the BNPL of a credit card today, right? Now, if you now look at businesses, only 14, the business rule is for a bank, is that if you are a small business and you had revenue growth over the last 3 years, we'll give you a 1 year working capital limit, which will be for some banks, average of the last 2 years of revenue, or some banks the average of the last 3 years of revenue. Now we know GST data. Only 14.8% of the MSMEs have had increased revenue, so consistent increase in revenue for the last 2 years. So only roughly rounded off, only 15% of the MSMEs are eligible for a 1 year working capital limit. And you know how many of them have it? 12% have it. So the gap is only 3. That's not the business to go after. The business to go after is the 85%. But for that, you don't please make the mistake that you did with BNPL. That the turn down of that guy, usko hum jaake loan de denge. 1 year working capital loan, which is what is the conversation today in the industry. That's not the answer. You say, of course I can't give you a 1 year loan, but I can give you a 3-month loan. Because I know you're not going to go out of business in 3 months. How do I know? Because I know what your outstanding invoices are. How do I know what your outstanding invoices are? Because I can see them on GST most of the time. But if you give a 3-month loan to a business, that is a valuable loan. If he manufactures chairs, he can buy raw materials, manufacture more chairs, sell them in 3 months. If he is a PC assembler, he can buy PC kits, assemble PCs, sell them. If he assembles ACs, he can do the same. But that is not applicable on the consumption side. So a short tenor working capital loan is very useful in business. The problem is, let's say your spread is 5%. You gave a 1 lakh rupee loan for a year and you got 5% spread, you made 5,000 rupees. Now in that 5,000 rupees, you got to pay for cost of acquisition, cost of processing the loan, cost of dispersing the loan, cost of collecting the loan, and all the cost of regulation that is there, right? Let us say that cost you 2,000 rupees out of the 5,000 rupees, right? Now you give him a 1 quarter loan. You're making only, damn it, 1,250 rupees. You can't make money. That's why that is not happening. So to make sure that 1,250 comes down to 200, there has been an effort that's been going on for some time. How many of you know of it as Oaken? Oaken has a 4.0 release, not 1.0, 2.0, because finally, a week or so ago, Oaken.dev is the place to go. 2 open house sessions have happened, 2 more are going to happen, 1 this week and 1 next week. Because it has now been brought down. It's not tech that has made it happen. It's a new way of doing acquisition. It's a new way of being able to process a loan, finding a new way of doing collections, new way of being able to do disbursement, and real-time regulation so that it's low cost and you don't have to spend a lot of money to inform RBI about what's going to happen. It's a completely new business model change. Now that is actually going to unlock a market. Now, variously estimated by the UK Sena MSME committee as 17 lakh crores, by Rhythm Desai a similar number. It is, my prediction to you is that it will be twice the size of our retail lending book that started with Citibank in half the time. Because all the pieces of that are ready. So if this is not the 4th, remember I talked about 3, bank account penetration, UPI and account aggregator. This is the 4th. But for that, you have to please run away from BNPL.
Sure. So
you have to run away from the US thinking of the problem. That works there because everybody is a damn salaried employee there and stable incomes. That's
and lots of dollar revenue.
And lots of, so that's...
like dollar income rather.
So it is a function of what you can unlearn. Anybody here who was in the payment wallet business?
I can see one hand at the back.
Okay. Poor guys never made it to UPI. Because they were not willing to unlearn. Unlearning is harder than learning. In our credit market, you will have to unlearn. I've told your story, one of your portfolio companies, I don't know whether InstaMojo is here. We did 2 of our iSPIRT sessions there trying to convince them, please embrace UPI. आप भले लिंक पे पैसा लेते हो, ये तो आपके लिए गॉड सेंड है. चिल्लर, do you remember it?
It was also ours.
तभी रेजर पे the poor guys wanted to do it. Unfortunately, they had taken money from MasterCard, and MasterCard said no, this is not good for them. Nandan spoke to their board once. I spoke to their board once, trying to tell them they're VCs. But yeah, what's good for MasterCard is not the same thing as Razorpay. Had Razorpay not lost a year, it would have been the biggest infrastructure player on that side. 2 companies that did well, both were startups because they had nothing to unlearn. Do you know the name of those companies? Both Koramangala companies. By the way, all the companies I've mentioned so far are Koramangala companies. And you know which ones are they? PhonePe and JustPay. Because they have nothing to unlearn. My hope is that is not what befalls the credit market again. Because all the people who are in credit have got so much of unlearning to do. But on the other hand, please, you are the early stage investor, invest in the new guys who have no unlearning to do.
Absolutely.
Maybe they are the ones who will win.
So there was one, sir. You brought SMB credit.
Second. See, if there should be one thing that should be personalized product, it should not be a personalized car. It should be a personalized financial product. Isn't it? You and I, if you apply for an auto loan, we shouldn't get the same loan.
Agreed.
Right? Or loan or same insurance. Right?
Yeah.
So the question is, the problem with personalization is the following. I go to Policy Bazaar And I say, I want a auto insurance. And he says, give me everything you can, because I need to send a lot of stuff about you to the insurers, 5 insurers on the back end. And I said, chalo yaar, acha insurance milegi, de dete hain sari information. So sari information you give it to an intermediary. Because the intermediary is in a forward loop. Because the only way you can personalize on the other side, the manufacturer of the financial product can personalize is if they know a lot about me.
Correct.
Right? So now what happens in this system, the intermediary is actually willing to now use this information to upsell stuff to me and basically not treat my information properly. Right? So there is a mistrust in this system everywhere in the world, not just in India. Right? Regulators hate this, individuals hate this, and this slows the process down. Now, because of the account aggregator, now it's possible for an intermediary to say, look, I'll help you get a personalized insurance. I want you to be able to give as much of information as you can to those insurers, but I am blind to that information. Because in the account aggregator model, the consent manager is blind to the information. It facilitates the flow of information, just the way PhonePe facilitates the flow of money, but the money does not flow through PhonePe. Right? So same is our model. In fact, the DPDP bill requires this model to be followed for all sectors of the economy for personal data. So now in the forward loop, the intermediary is blind, but in the reverse loop, now intermediary can now help me pick amongst the options that I have. So suddenly the intermediary becomes my agent and not a seller of the manufacturer. Is a buyer's agent, not a seller's agent. And it does it in a way that makes sense. How many of you know there is a company, Koramangala company, which is paying $1 billion to come and be domiciled in India?
PhonePe. Yeah.
Why? Why is giving them $1 billion?
Take advantage of this opportunity.
Because they have said if they can make this work in India, this is one of the biggest innovations in the world. How come you don't know about this? How come you are not pursuing this? Do you think they're crazy to offer $1 billion to their subsidiary otherwise? No.
Going to the tax department.
So, yeah, and that too going to the tax department, not even going to the company. And the company needs money to implement this. So what is happening is that we will have a next generation of financial marketplaces that will come. And these next generation of financial marketplaces will not have rogue intermediaries. And they will be buyer friendly. They'll not be seller friendly. And if you want to see, this is actually to an extent happening with mutual fund industry. Who is the buyer's agent in the mutual fund industry? What is the buyer's agent called? RIA. What is the seller's agent called? Distributor. Do you know next year we'll become the first country in the world, most likely, where more than 50% of the AUM flowing into the mutual fund industry is in the RIA model. Where are the digital RIAs that want to take it to the consumers? Where are they? I don't see them, but they'll come. Maybe unlearning won't happen with the current guys, but the new guys are coming. So there is this second thing which I'm talking about, is this new class of marketplaces that are going to come, which are going to be agents of the buyers, not agents of the sellers. And that is going to create trust. And you need trust in the financial markets to unlock the segments that have not been unlocked so far. So that's the second one.
The third one, sir. Then, yeah. We can go on and on, but I'll have to wrap at some point. Yeah. So the third one.
So look, DEPA has two parts. The first part of DEPA is how do you deal with personal data. So I'll explain very, very quickly. Let's say I'm IRCTC and he's Make My Trip. He says, Bhaiya, IRCTC, can you give me some personal data about Sharad? Because if I can find out what railway trips he's taken, then I can probably give him better, packages to offer, right? So today that's only possible through the consent system. That I'm not going to belabor that. Second thing Make My Trip wants from IRCTC is all the patterns of usage. When do people travel? Where do they travel? What age group? what price point and stuff like that. And why? Because then they can train their model. Why do they need to train their model? Because then rather than saying the 4 of us are going to Kashmir for 3 days, will you give us an itinerary, and asking that from ChatGPT, then you can ask that from Make My Trip. Today what is happening is you make your itinerary on ChatGPT and then do the hotel booking and the travel booking, and Make My Trip makes no money out of that. So they're desperate to be able to offer a better trip advice, trip planning advice than ChatGPT. The only way they can do that is if they unlock local aggregate data, which allows them to put a wrapper on ChatGPT and offer a better opportunity than that. That's what's become possible in the new system that is coming. I'll give you a heads up only because of Karthik. If you go to depa.world, you will see one side which has always been there, which is called the inference cycle, that's to do with personal data, and account aggregators based on that protocol. But hopefully on the 6th or the next week, we will announce the training cycle of this, which is actually there on the website already. Only the talking part is not there. That will come next week. And that is enabled by the law. What it does is, in India, it unfreezes aggregate data markets. Can I spend 2 minutes on this?
Yeah.
Because I think it's an important concept.
Sure.
If you go to Tata Memorial and say, I'm in the cancer business, I need cancer data from all the national cancer grid, which is about 150 hospitals. Those hospitals won't give it to you. In the US, they'll give it to you. You know why do they give it to you? Because they give it to you and say, I'll anonymize it and I'll give it to you. My deal then is, don't anonymize it, right? But if you do anonymize it, or somebody in your shop anonymizes it, you shall have to pay me a punitive penalty of running into hundreds of millions of dollars. And that punitive penalty I can enforce, because I can go to the US court and get what's called a discovery order, where all your relevant emails will become available to me. I'll now look for problems in that, and I find the smoking gun, I'll invoke the indemnity that you had given me.
Correct.
So that ensures good behavior on your part. That ensures good behavior on Make My Trip's part if IRCTC was to give it anonymized data set. But in India, you can't enforce such a contract. In fact, you can't enforce it in Canada, you can't enforce it in Europe, you can't enforce it in Korea, you can't enforce it in Japan. Because the US has a peculiar legal system that allows for these asymmetric contracts to exist. And that system is not there elsewhere. So what happens is, in these cases, somebody says, IRCTC says, Make My Trip will give me 2 crores. But if something goes wrong, the downside of this is 1,000 crores for me. It's not worth it. I might as well sit on my data and do nothing. This is how a hospital thinks in India. This is how a bank thinks in India. So now the only way to invert this problem is to think differently. So in the Indian model, what's going to happen is, Make My Trip will never get anonymized data of IRCTC. Instead, it will send its model to IRCTC to inspect, and the model will go back. Now, IRCTC will say, this model that you're sending to me, I have the right to inspect it, or I'll get it inspected by third party to see that it's a kosher model. Kosher model means that when the model goes back, it doesn't take any private data back. It only takes model weights back, which is completely acceptable to Make My Trip. But Make My Trip worries and says, what if IRCTC steals my model? So there's something called the confidential clean room to give comfort to Make My Trip that his model cannot be stolen.
Wow.
So there's differential privacy-based inspection to give comfort to IRCTC that his privacy will not be compromised. This new system is a unique system that is coming to India. And what will it do? It will unlock our aggregate data markets, because our aggregate data markets will then lead to model building. Where will that model building happen? In the underwriting models. And my hope is, this is what we've been talking about, that the Airbus of underwriting models, or Microsoft underwriting model, or Google of underwriting, whichever metaphor that you want, will be an Indian company. Because actually we have a lot of data. If only we can unlock it. And this provides a way to be able to unlock it. So if you are looking to get into a business, see, because there will never be a time where all the lenders, any lender will have 60% market share in India. Do you think that will happen in any segment? No.
No chance.
But it is possible that the top 3 lenders, each of which have 20% market share, are all using the underwriting model from a startup. which then collectively has 60% market share. So the winner-take-all part of the business is not the lending part. It's actually the underwriting part.
Yeah.
And that's really where the opportunity lies in a very big way, simply because a new type of public infrastructure is coming. And that is going to enable this. So I'll leave this thought with you. Whenever a new public infrastructure comes, please think of what is the new player that will be there. In the case of UPI, it wasn't the custodians, it was the apps. Are you in agreement with me? In the case of AA, it's not the FIU or FIP, it is a consent manager. Are you with me so far? Right? In the case of Oaken, it's actually going to be what is called as a borrower's agent. And the borrower's agent will be the guy who doesn't have the balance sheet. Because up till now in lending, there are the only people who can succeed are the people who have the balance sheet.
That's right.
All the other people who are there have no izzat, no money. They are basically agents at the
mercy of the
lender. Now what Oaken does is it creates a new paradigm, just like UPI, where the power will be with both parties. The borrower agent and the lender will have to collaborate to make lending possible. And so therefore, those of you who don't have a lending book now have an opportunity to be a player. We call it a player. मेहनत बहुत होगी, पर इज्जत भी है और पैसा भी है. And that borrower agent is a new class of entity that will emerge. So that is where you have to go. Similarly, when DEPA comes, a new class of entity that will emerge, which is called a training data consumer, which is the modeler. So when you think of public infrastructure, please don't think in old terms. Think with a clean sheet of paper. Think in terms of what's a new entity that will come in, which will actually be valuable in the future. And what do I have to unlearn to make it possible? That's the future. So I've given you 3 things. There are more, but these things are the most important.
Thanks a lot. I think the audience appreciates it. As I said, we can go on. I'm hoping Sharad stays. We are between drinks and dinner, so I don't want to hold the crowd. But please stay on, Sharad. And I'm hoping most of the audience who has questions. I was going to leave some time for questions, but we are about 10 minutes over. Sure. But let them grab you and ask you more specific questions. Once again, flew down from Bangalore just specifically for this. He's the Koramangala man, but in the Bombay crowd. So appreciate the effort again, Sharad. Thank you very much.